Welcome, friends. So this week, our systematic trades closed between $5,000 and $12,000. This week, we did have a much wider range, and in part, that's because we had a significant amount of volatility. And this week, we were able to sell a lot of our strategies for 50, 60% more than what we normally would achieve. So it did create a little bit wider range depending on how people are managing their strategies. For a lot of people who maybe only like to trade at a very specific time or for a very specific time, they want to have strategies where they know that their trades are going to open and close within 30 minutes or 1 hour. But for those who are trading for a full-time income, they would prefer to be able to stay in the trades longer and to really be able to see the full culmination of the returns on their trades. So let's just get started here. All right. Um, so this week, in fact, we didn't actually have that many trades open. As you can see, everything from February 9th to the 13th, everything is S&P. And that's because this week we didn't close any of our discretionary trades. We have mostly been opening discretionary trades. So just to give you a bit of a difference, when we talk about discretionary trades, that is where we're looking at a sector performance or a sector rotation that may be building up, or looking at a chart that may be kind of culminating in a breakout, and then trying to take advantage of that specific move. But our systematic trades, those are trades that show up every day or every week, and we are trying to capitalize on certain patterns that we see show up day over day. And so that's why no matter what's happening in the wider market, you will always see that our systematic trades are producing. Now, you'll see, as I was mentioning before, that this week we just had a massive amount of credit in the market. So you can see here on our Friday the 13th iron butterfly, we had a return of over $5,500. Even on our one of our other butterflies, we also had a return of $2,500. Normally on these trades, we probably would have seen kind of a high at like a $12 or $1,800, or even a $2,000 or $3,000. But this week, because volatility was really high, you could see that VIX was up in like the around 17, 20, and then came back down to about the 19 level. And really, the last like 6 weeks, the VIX has been really moving much closer around that 13, even lower to 10 handle. So that's part of why, each trade was able to be a lot more productive per trade, because the amount of volatility and the amount of vega that was sitting in that markets was just giving us these massive returns. Now, you may be like, yeah, but then your losses were also a bit higher than normal, which is true. So here you could see, if you did not manage this trade at all, you just open this trade and then let it expire, which is not what we do in the Discord. Anybody that is trading with us or trading these specific trades, you would have received very early on the kind of acknowledgement that we're up a certain percent and you need to put in either a stop loss or a profit target, or you need to close the trade if you are not going to watch it. Because as you can see here, this trade ended the day 3,000 down, but you can see that actually this trade was at a 30% return. So this trade had already returned something close to over $1,000 before it started to roll over. So in the first hour and a half of the day, so you can see here the time at 4:30 p.m., that trade was already returning well over $1,000. Now, 4:30 p.m. for me is 1 hour after the U.S. markets open, because the U.S. markets open at 3:30 p.m. in Montenegro, obviously. So that would be at 10:30 a.m. EST. So we would have signaled in the group that we are up over $1,000. You should put in some kind of some kind of take profit parameters, whether that's putting in a stop loss at break even, or putting in your stop loss so it actually closes you out with a profit. Now, most of the traders who are in the group are people who have been trading for a significant amount of time. So they do have their own rules. But for those who haven't been trading for a long time, we do give a lot of signals along the way to help you kind of stay alert and make sure that you're getting out in profit. Because of course, the day before this same trade actually returned $4,000. So you wouldn't have been negative. You still would have ended, you know, like day over day, you would have still ended up green. But it would have been very frustrating to have a trade where you're up over $1,000 to suddenly see that same trade end up in the red by 3,000. That's just not really good trade management. And it's not just this trade. It's the same here. You can see that this trade was up over 30% at 9 p.m. 9 p.m. would be 1 hour before the close. And you can see that for the duration of the day, the trade was green, was only at the very end of the day because we did end up with a price squeeze on the S&P. And I did also indicate that. And I do just want to show you what that kind of looks like for people who are like, okay, well, what does she actually tell people? And so, here I'm showing you the VWAP is above us. So, here is our midday price. And here we're kind of digesting around it for a really long time. And then I signal, we've been digesting for 3 hours in a range. It is unlikely that we are going to stay in a range. I also pointed out that we had a weekly price gap sitting right below us, and that would be a strong magnet. The fact that we could not get up back over or up to the daily VWAP was a sign that selling action is still slightly aggressive, and we're not getting strong enough buyers to at least get us back to equilibrium. So people who are in the group obviously are getting these getting these notes from me. So it's not like I'm making this up. You can see here. Let me just back up. Here you can see at everyone. If you're happy with your returns, you might want to add some alerts in case SPX does keep dropping. As I noted above, the implied move and market maker move are contracting and VWAP has moved down, which gave us a signal that yes, price has moved a lot, but we can still see that there are selling volumes, and those who are in the group, they can chat with me so they can ask for more clarity if it's not clear. But here you can see that I have marked out this weekly gap, and all of that information, if you've been trading with us for a while, should be clear. And if it's not, always ask questions because I'm not trying to speak in Morse code. And just to give you guys some feedback here, I did say we are sitting on an outer rim of profitability. So every point that we drop, you'll be giving back profits. Don't let a $1,500 trade turn into a $200 trade. And in fact, if you would have stayed in this trade, it ended up negative, as you saw. And then I said we could pop back up, but by end of day, it's always dramatic when you've been chopping sideways for 3 hours straight. The reality is that our risk was to the downside. Any downside move was going to make us lose money. We had nothing to gain in the event that SPX dropped. So it just wasn't going to be responsible for us to do nothing. So some people may have done nothing, and that would have been their choice. And they did that obviously with full knowledge. So this week it was a little bit like less by number of trades that we were in. We like to keep things light and humorous in the group. As you can see here, we had a number of different trades that were on. So we're not only taking iron butterflies. You also see that we have credit spreads. We also did here a double diagonal. So there are a number of types of trades that we're putting on, and mostly because I think it's really important for people to see that as the S&P is kind of moving around and like doing its thing. Let's actually show you the real S&P chart here because this is an older. This is a replay from. I like to do homework. Let's just look at this. So, we want people to be able to take advantage of different sides of the market, right? Like the aim is not that you take one type of trade and that's the only trade that you're going to be in forever. For everybody, you should be thinking about different ways to take the trades. Now, for those of you who attended our webinar on the weekly blueprint, one of the things that we argued was there's a way to take advantage of the market because when you look at a weekly chart of the S&P, and this is actually a 4-hour chart because I do want you to be able to see a few more candles than just the weekly candles, but um, you can see that overall the S&P is still making a slight uptrend, though it has found a top. Now, the problem is that if you're trying to capture gains by waiting for a squeeze to the upside, you're not going to be able to make a lot of money. And we do take trades like the iron butterfly, which allows us to take trades as we're just consolidating sideways. However, if you're doing something like the weekly put credit spread that we talk about, all you're doing is selling against a move to non-move. So as long as the S&P is above a certain level and slightly pushing to the upside, which it is, very slightly, but it is pushing to that upside, you are able to take advantage of put credit spreads that are sold below a key support level. So that's a way that people who maybe don't want to have to monitor their trades as much are able to take advantage of that kind of price action. Where if another person is only able to buy leaps, this might not be the most successful strategy. For the last months, you would have felt very frustrated because you're really not getting, even though you are getting a lot of chop and you are slowly moving to the upside, but in fact, we still haven't gone above 7,000 and we've been here for a very long time. So, it does beg the question, if you're trying to make all of your money on up moves, that was great, that was great like way back here. But, sense about here, that's not, unless you're perfectly catching bottoms, that's not making you a massive amount of money. So, we want people to be able to figure out, how they can trade different sides of the market and really be able to capitalize on all the different types of moves. And this is why we like to educate people on things like, okay, maybe at this particular time, leaps aren't going to be the most profitable play on the S&P, but something like a double diagonal, maybe. And so that's where we're kind of giving you guys those hints to allow you, even if you don't want to participate in every single trade, at least you have the opportunity to watch how someone is actively trading them and actively managing the positions week over week. So, all right, friends, this was a much shorter video just because the number of trades we were in was quite limited in comparison to, what we normally trade. But actually, I think you guys might not have been able to see my S&P chart. So even though I was talking against it, you guys were not able to see that, and I apologize. So now I have specifically shared the S&P chart. So now I can show you again what I meant. My apologies, but at least you heard what I was saying. And the main issue is, here you can see that we basically had this rounding top on the S&P, but we have established some protected lows and we've not breached them. So by selling put credit spreads back down here, you are able to make money on the fact that price isn't dropping below a certain level, even if it's not pushing to new highs. Different types of option strategies allow you to take advantage of different kinds of trades. And as I was saying with the iron butterflies, the great thing for us is that you can see the S&P is just trading in a range and it's not moving massively, not to the upside and not to the downside. And we've been trading in a very clear corridor for a while. So selling strategies where the key expectation is that you're going to sell at point X. And as long as the price at some point comes back close to that point or that price that you've marked out, you are going to make money with the time decay and with the volatility decay. And that's why these iron butterflies have done so well in this market, because in fact, the S&P just isn't doing that much. Even for a lot of people who were talking about this wedge pattern for a while, we're expecting to get a really strong squeeze to the downside very quickly. And that also didn't happen. And not that we got a really strong buy the dip reaction, we did not, but we did end the week, inside the range. We didn't end the week green. We just ended the week inside the range. And so, we are getting a bit of expansion in the price, but we're not really getting any strong movement. So, price action like this, wouldn't have justified you staying in leaps. Had you been in leaps from back here, the 7,000 was really your sign to get out. Now, had we had like a really massive drop down, you may have like reloaded on a bunch of leaps. But until you really see that you're getting a nice kind of trajectory, here you've just given back about 4 months of theta decay without gaining anything on any of your long positions. So it would have been really, and the VIX is going up. So, the drag on your contracts just wouldn't have been worth sitting in this kind of price mess. And that's why it's important to have a diversity of trades. Something like a double diagonal looks like the profit area looks like this. So if you hit the bottom side or you hit the top side, you get that kind of max profit, which we talk about with calendar spreads. But even if you sit in the middle, you still make a decent amount of money. And then, of course, with put credit spreads, you are selling you're selling below the price, expecting a push up. And it doesn't have to be a push up. You make the entire amount of money, whatever you sold to open, you keep that entirely as long as price stays above your short position. So if you are selling anywhere down here, we never even got close to that area. So it wouldn't have mattered. All of your positions would have expired out the money. You would have kept the entire credit, even though in fact the S&P wasn't moving that bullishly or that strongly. The other thing that some people like to do is to sell iron condors. So both to sell the call side and to sell the put side. And as long as you're chopping in the range, then you're going to make money. I personally don't prefer that methodology. I generally prefer iron butterflies to iron condors, but that is a personal preference in part because I do like the trade management on an iron butterfly more than I like the trade management on an iron condor. So, this is why we teach people all these different kinds of methodologies, because we do want people, if 5 people come to the chart, and even if they all have the same technical thesis about what's going on with the markets, they can present different ideas about why they might prefer a certain type of options trade over another. And just like I said, my personal preference is iron butterflies over iron condors. But I know that there are people in the group that prefer iron condors to iron butterflies. And the fact that we can have that conversation, they can speak back to it and explain why they prefer one over the other, I think is probably one of the most invaluable pieces of what we're doing at the Tradespeakeasy. But of course, that's again, just like a personal opinion. And the most important thing is that inside the Discord, you guys are making money. So I hope this week was a profitable week for everyone, especially those who are focused on trading the systematic trades. I hope you did well and you were able to make your money. And for those who are still, waiting for those discretionary trades to kind of hit their peak returns, don't give up. They are going to get there. All right. That's for now, friends. I hope you guys have a great week, and we will see you in the Discord on Monday. All right. Bye for now.